Nathan. Hey, other John, Deborah, BJ. Well, today we've got a lot to cover. Obviously, we're off to an awesome start to the year, 24-3. Today's probably going to be a loser, um, which is good for the overall market. Unfortunate for our trade. So probably 24-4 to start the year. Jason is going to take us through all of the current updates, new rules, or I guess I should say additional filters we're putting into place, allocation sizes, what that looks like in the portfolio over the long run. Really, really cool, exciting stuff. And then also, as I let you guys know in Telegram, we took all of the rules, all of the allocation, all the information, and I reworked it into the indicator. Everything we'll talk about today is now going to be built into the indicator. I'll upload this in the portal. So actually, even though yes, today's going to lose most likely, let's be real. But if you look here, the new rules that we're going to be putting into place is actually a skip today. And the cool thing is, if you look back, it'll tell you calls, three position size. We'll tell you what that means in a second. Here is calls, three size, puts, one size. It's going to do it all for us. It's really cool. Calls, half size allocation. We'll cover it all today. Of course, in the alerts, we're going to do it all for you like we've been doing. We'll let you know the position size allocation, share the screenshots, everything. But if you use Indicator, we're going to get this uploaded for you guys so you can see exactly what we're seeing in real time too. Super, super excited to get this going. Everyone give a big round of applause to Jason for being the main driver in getting all this data organized, set, sorted. Florian's obviously helped a lot as well, but very, very excited for what we're going to show you guys today. You got a lot of, yeah, Jason is the man. You are right about that.
All right, cheers. Good to see so many people in the chat. Everybody seems pretty excited. Want me to go ahead and take the screen from here?
Yeah, let's do it.
All right. Well, don't say great job yet. Just
Oh, yeah. They haven't even seen it yet.
wait.
Yeah.
Just wait a minute. All right. See if I can do this right. See, I want to see the chat too. How do I also see the chat? There we go.
Yeah. Hey, this will be recorded for you guys. We'll share it in the members area. And again, looks like we have about almost 300 people in here now, which is great. What we're
Awesome.
going to talk about today isn't just going to be the data. We're also going to talk about how we're trading it officially going forward starting tomorrow. So these are going to be rules that are going to be implemented right away. Again, all
All
done
right.
for you in the alerts, but we want to give you all the information here.
All right, Graham, is my head covering things up or can you see
Nope,
the
you look
screen?
great.
Is it okay? All
You're doing
right.
great.
Okay, well, hello everyone and welcome. I'm very, very excited to share what has been now months of research. We finally get to unveil for everyone. So a couple things just here at the beginning. A, you're going to see a lot of numbers today, a lot of numbers, a lot of data. You don't have to take notes. The key is to follow along and understand the reasoning, but at the end of it, like Graham kind of showed you already, he has an indicator that we have built that is going to handle all of these things for you. So do not get overwhelmed with memorizing the rules and the numbers. Um, we are going to show we're going to show the reasoning behind and how we got to where we are, so that hopefully that makes sense to you. And then from there, Graham will be able to provide you everything that you need. So do not worry about if I go too fast and I flip and I fly through some of the numbers. You don't have to catch every single number. 10-4, everybody good with that? but I'm going to give you an explanation of what we did. And hopefully that will make sense to you, and it'll make you as excited as I am. So the other thing just up front, there is, and please don't, in the chat right now, like I don't need ideas for new things to look at. We've done months and months of looking at lots of different factors and seeing what has an impact and what doesn't. And we have found there are three main things that have an impact, right? And that is what we're going to be going over with you today and explaining. Spend a lot of time digging into data and then to find, well, that didn't matter, right? We go to dig into data, we find that didn't matter, but every so often we dig into data and we find, ooh, this really seems to matter. And so the other thing, just full disclosure, it's a lot of numbers. Numbers can be dry. So I am going to try to mix it in. This is also a venture into my AI graphics fun. So I discovered Nana Banana this week. So I had a lot of fun. So full disclaimer, like if it's too much, it might just be too much, but I'm going to try to keep this engaging so I don't bore you with numbers. So first of all, we have a breakout trade, right? And we are looking to supercharge that. So what we did is we went back over 30 months and we did day by day, looking at every day, where's the breakout level, where's the top and bottom of the range, what time do we break out, when do we fill, was that a profit or loss, and then what were the conditions of that day. And we went back day after day after day after day, all the way back to June of 2023. Even though we didn't start this service till last summer, we went back just to see and to try to answer the question that there might be some better things to do and to consider other than just to take every single day. But what you see here is all the trades since 2023. If you had taken, and this is based on, I was envisioning a $20,000 account, or let's say a $25,000 account, so you can day trade, right? A member putting $1,000 in, $1,000 in. Some people filled, some people didn't, Katie. But what if you put $1,000 into every single day? What would that look like? Okay. And what we found was it would have made a total of $28,000. So if you had a $25,000 starting account, so you can day trade, and you made $28,000 profit, put a yes in the chat if you think that would be in 2.5 years. Would you be, actually put the word happy in the chat, if you'd be happy making 28 grand in 2.5 years on a $25,000 account? So your account would grow to be 53. Tell me, would you be happy or not? You can even say not. Okay, you're allowed to say either thing. And this is going to be interactive. This is going to be a little bit like Price is Right today, too. Name the number, right? Okay, so look at this data. What do you see? What do you notice? How's the win rate? Okay. But we're taking 521 trades. Do you see how many times, like, we start out negative, we get positive, and then back to zero? Positive, back to zero. Positive, back to zero. Positive, back to zero. How many times? And then we hit here, and then we really start to go, right? It works from there. But for me personally, I would not be super happy if this was my account and my account was looking like this. I would like this time, but I really wouldn't like this time or this time. Agree with that? This is on SPX trading $1,000 a day. So like 4 contracts. Okay. So, and you can see total ROI, given what we've put into it, $1,000 a day for 521 days, right? Yeah, to me, that's not really the bang for my buck that I want. So this is what caused us to roll up our sleeves and go to work. So from here, we are really trying to answer the question, are some days more ideal than others? You could have a lot of the things the same, but is there something that we should consider? So the first thing we considered, or one of the things that we considered at the beginning was, well, this is kind of the way we think about it, right? We think about it, the way I think about it is like a filter. You start with a whole bunch of ugly stuff and dirty water and a bunch of rocks, and you use your first filter, and that cleans out a lot of the big stuff. Then you take that and you put it through a second filter, and that gets you even better. And then the third filter, and by the end, what do we got? A much different thing than we started with, right? So this is kind of this is the thought process. Can we find filters that will weed out the bad and leave us with most of the good? Does that picture make sense to everybody? Give me a guess in the chat if this filter idea makes sense. Okay. So this is what the project started with, okay? And our first thing that we started to consider was put call ratio. Do you notice a relationship here in the put call ratio that especially when we're down here under 0.75, the market tends to fall? Underneath, fall. Graham talks about this in opening playbook all the time. Fall, underneath, fall, underneath, fall. Do you see the correlation? So does it make a whole lot of sense to trade calls when we're down here? Right before the market falls? That was the first thing we wanted to study. Well, what happens when the put call ratio is low? Right? Sorry, I've got 3 dogs here. They see somebody outside. Well, here's what we found. What do you notice? When the put call ratio was very low, extremely low, like 0.75 and below, and we tried to trade calls, look what happened. Not so good. 21 trades, not so good. So how about we just don't trade those ones and we trade the rest? That takes us down to 500 trades, but that leaves us with mostly the good, right? This was a little bit negative, but this was atrociously bad. So I think we could probably skip the atrociously bad, right? All right, so that was the first thing we looked at. Also, we really wanted to consider the VIX. You probably understand that when the VIX is low, Graham keeps talking about the VIX under 16, right? The market doesn't move very drastically. But as soon as the VIX picks up, like it is now, we get bigger movements both directions, right? So what do we want in our trade, right? What's better for us, a low VIX or a high VIX? What do we want? Do we want the market to stay still, or do we want the market to move, right? So I think this is worth studying. When we dug into the data, do you see what I see? What happens when the VIX is under 16? Pretty clear, isn't it, right? Under 16, no bueno. Over 16, pretty okay. Now, we figured this out a while ago, and so Graham already instituted these rules to protect us, and we've been trading with these rules already. But here's where we start to see a change, right? Can the VIX get too high? Good question. Maybe worth looking at, right? And is every day in the low VIX bad? Or are there some times that low VIX is okay? Is every day in the high VIX good? Or are there some times that a high VIX still isn't good? But here's the numbers. Wanted to show you. When we put the put call ratio, when we skip those trades, and when we didn't trade when the VIX was low, how do you like this? What was our first number? Type in the chat if you remember the first number. 28K. Thank you, Des. Yep. And now we're up to 41. So better? And at this point, hold your questions about other stuff. If you've got things that are unrelated to this, like today's trade, even just hold it to the end. We'll take your questions at the end. We'll talk about Schwab and other things at the end. But for right now, let's try to stay focused on this task. So far, so good, right? We have an improvement. We went from 69% to 76%. Notice we're not trading nearly as much. So our average per trade went from 54 per day to 156. We tripled it. And our RLI went from, I think, 5.4% up to 15%. Right? Put a better in the chat if you think this is better. All right, great. Well, if you think this is better, just wait. You're going to be really happy if you're happy now. That's wonderful. All right. So then we decided, let's dig into this more. And here comes some of the more. One of the things that we need to understand is that there's something, the VIX measures volatility 30 days out over the next 30 days. It looks at option contracts 23 days to 37 days, and it measures the volatility that's expected in the next 30 days. But there is now something called the one-day VIX. And the one-day VIX measures volatility in the next 24 hours by looking at today's option prices and tomorrow's option prices. Which one of these do you think affects our trade more? How much the stock's going to move in the next 30 days or how much it's going to move today? Yes, everybody got the right answer. Bonus for everybody. Well done. Great. So this is something that we need to dive into. It's more than just the VIX. What about the volatility today? That's really going to have a bigger impact on what we're doing in this trade. So what do we want for our trade? Dum, 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 dum. Volatility. Love this slide. Volatility, right? We want the storms and the fires and the lightning. We want the market to be moving wildly up and wildly down. Why? Because when it breaks out of our range, we want it to just keep going our way. And volatility is a good thing overall for our trade. Yep. Right? It is a ticker. Yep. VIX1D is the ticker. Okay. So we started digging into this. And really what we're trying to figure out here is, or what we're trying to get to the bottom of is, right, is there more volatility in the short term or in the long term? In the short term, is that more than the long term? So even if the VIX is up, is the one-day VIX up more? Or is the one-day VIX kind of flat? Because that gives us something that I'm calling the VIX percent. And I started measuring the percent. How much does the short-term volatility compare to the long-term? If that number is big versus small, I think that might matter. So, ready for some numbers? Here comes the data. Oh, I forgot about this one. I love this one too. We want XVX to move. We don't want it standing still. We want it moving. That's when it's fun. Wouldn't it be fun to be driving this car right now?
Oh yeah. Ooh. Well, I8 right there. I can't believe you had Jim and I make you all these. This is awesome.
I know. I had so much fun. Yes. So, first thing I want to show you. This is just looking at the VIX one day, and I did a bunch of different categories. I looked at all these numbers, and I tried to find cutoffs. And even Gemini helped me find perfect cutoffs. The cutoffs seemed to be 14 and a half. After a lot of trial and error, we found 14 and a half. Move my Epic thing. Okay, sorry. How about that? Trying to get, I've got the chat and all these things in the way. So thanks, Michael. Above 14 and a half, look at what happens to our trade. If it's below 9 and a half, we're negative. Boom, boom. A normal trade, we're at $63 per trade. But look what happens. 3 times the profit when the 1-day VIX is high. So anybody think that's significant? Give me a yes in the chat if you think that's something we ought to consider trading when we're poised to make 3 times as much. It doesn't happen all that often, but when it does lose some trades, right? So what is high? High is above 14.5 for the 1-day VIX. Okay. I'm a little bit more willing to put my foot on the gas when I know I'm expected to have triple the profits. Now we look at what about when the percentage is above 75, below 50, or in between, right? How does the short-term 1-day compare to the longer term? Yeah, Paul, you're headed where I'm headed. Play with more size. Well, when we get above 75%, we're at double the average per trade. Doesn't happen too often, but it's double when this is high and this is high. So now this got me to really dive into the breakdown. All right, so there's a lot of numbers you're going to see here in a second. First of all, is every day bad that the VIX is below 16? Well, I found an exception. It depends when the VIX percentage is high. Even if the VIX is low, we get a good trade. So how about we don't throw the baby out with the bathwater? How about we don't trade below 16 except when this happens? We'll take that. I'll take $112 a day. Thank you very much. Okay. What about when the VIX is medium? Between 16 and 20. Well, there were a couple things we saw here. You see this? $289 per day. And then here, this is kind of negative. So how about we skip those and maybe we put double the allocation when it's this good. See where I'm headed? I'll bet you I could win more like this. All right. And then the high VIX. Is every high VIX good? Let's see. Well, most of the time, yes, except, well, there were these 7 duds. What happened during those 7 duds? Well, that was when we had a low percentage, even when the VIX was high, which means the VIX itself was high, but the 1-day just was not catching up with that, which meant it was under 50% of the VIX, right? So how about we just skip those couple times, and with the rest of it looks really good. All right, everybody with me so far? So we're dialing in. We're trying to be more specific, more granular, making that filter even better than just catching the biggest rocks. Yep, dividing 1 day divided by the VIX. Right? All right, so here is the set of VIX rules that I put together. And you don't have to memorize it, but all it means is there are certain conditions when it makes a whole lot of sense for us to skip. We'll skip this day. We'll skip this day. And we'll skip this day. We'll trade normally here. We'll trade normally here. We'll trade normally. But we're going to step on the gas. Step on the gas when we've got our best chances of winning. Let's step on the gas and trade just a little bit bigger. So I kind of look at it as if this was a Monday and this was a Tuesday, and I was going to put $1,000 in here and $1,000 in here. How about I put 0 in and I put the whole 2 in here? I'm still spending the same amount of money, but I'm spending the money when it has the best chance of working out and making me the most money. And we will tell you all of this. You don't have to memorize this chart. You will know before the trade happens. We have an indicator for it. It's awesome. Okay, so ready? If I put this VIX filter, so think about pouring the water, right? When we put this VIX filter even more, it's going to catch some more stuff. Ready for the numbers? You were happy with $48,000? Look at this. We're over 60 now. Bam. Now there is this puzzle. The market raced up in August of 2004, and for some reason we kept triggering to the downside right before it raced up, and we kept losing. So I'd like to figure this out. This is still a puzzle. What happened in August of 24? If I can eliminate that drawdown, we're good. But look at the difference in the equity curve. Like, this is a bad drawdown. I don't like this. But the rest of it, if you ignore this, only very little blips, little drawdown, tiny drawdown, tiny drawdown, tiny drawdown, little bit there, little bit there. Okay, so that's what I'm going to show you. So here's the comparison. This is what we started with. I don't have average cost per trade, but what I do have here, sorry, I'm finding that face, is I can tell you $66,000 profit. Win rate goes 8% higher. We're only trading half the time though. So look at our average trade, 9 times better. We're risking half as much money and our total ROI is 5 times better. Where do you get the CPS from? What's CPS?
Maybe CPC.
Yeah, CPC might. Okay, yeah, that's the put call ratio. That's it's a ticker. You can find it on bar chart. I have it on TradingView. It's on TOS as well. So we're trying to lose less. You're out of your chair? Oh, nice. All right, put happy in the chat if you're happy with this filter. You like the filter. And we've improved our trade. CPC is the ticker. All right, sweet. Guess what? There's more. That's one filter. So here's the next question. Now, again, this is hindsight. There's no absolute promise it's going to do this in the future, but to me, a 500 trade sample size is pretty good to represent what's likely to happen moving forward. And it may not be exactly the results, but I'm pretty confident that if we trade with this filter, we're going to do better. We're going to make more money. We're going to sit out on the bad days and we're going to step on the gas on the good days. Anything you'd like to add at this point, Graham, before I move on?
No, this is awesome. Chat seems to love it too.
All right, here we go. So here are the next questions that might matter. Yes, CPC. So do you think these are worthy questions to consider? Does the day matter? Is one day better than another? What about the time? I looked at a bunch of different time buckets and I found there was some differences between if the 10:05 candle is the one that breaks out, or before that, versus the 10:10 candle. Yeah, I thought I'd study it. And then what about the direction, if we're going up or going down, right? So this is kind of, if you can envision, if the VIX filter was filter 1 and we got a lot of the rocks out, here comes filter number 2 on top of filter number 1. Okay? So I'll leave it to you, my students, if I can call you that. What do you notice about Mondays? Monday was yesterday, right? What do you notice? Well, let's talk about Mondays first. What do you notice about Mondays? Really not a lot to be happy about, except when we get early calls, right? No, we have not make today's trade was using our old rules. We're going to start making these trades tomorrow.
Yeah, we wanted to make sure
why.
to have this class
We'll
first.
explain why. We wanted to give explanation before we make drastic changes. So yesterday, when we got a call breakout early, I was pretty excited about that. Early means on the 10:05 candle or before. Because what happens a lot of times is there's a 10 o'clock shift and the market kind of moves, or it does this and it pulls back, and then at 10 o'clock it makes its move. But then at other times, like if it doesn't move early on, if it does this, and then right at the end it breaks out, a lot of times it's a false breakout, right? Correct. We'll have some days that we're skipping. So I thought it makes a lot of sense to double up on these days and maybe sit out on these days. Good. I'm glad Nathan's a nerd like me. This is stuff that gets me jazzed. My wife doesn't understand it at all. But I'm like, look at these numbers. And she's like, more numbers? Really? This is what you want me to look at? Numbers? They're just one. I know my numbers already.
We love them.
Right?
We love them here in 60 Minutes. We love the numbers.
Now, what do you notice about Tuesday? This is all 50% exit, Moose. I'm doing a different study about letting it go. Letting it go makes more, but there are a little different rules. What do you notice about Tuesday? That was today. Well, make money, make money, make money as long as we get an early breakout. Our breakout today was early, right? But puts on a Tuesday, they call it turnaround Tuesday a lot of times. Puts that are late, that come after 10:05. Yeah, that's fine, Brandon. You can start again tomorrow. First day of the rest of your life. You can do whatever you want, EpiPen. We're not going to make you do anything, but I'm not a fan of losing money. I don't like taking trades that I think have a 50% chance or a 58% chance or a 63. Where do I want to live? I want to live in the 85% zone. Okay? Now, that's Tuesday. What do you think about Wednesday? How are Wednesdays typically? Yeah. Calls, not so much. Puts, okay. Okay. Puts are decent, right? Thursday, I gotta move this along. It's gonna take forever, but I want you to see what we're seeing. So I'm taking the time, if that's okay. What do you notice about Thursday? Is there any time to supercharge? Jojom. Jojom. This is when I want to play. This is where I want to live. You can give me an 84% win rate and a $260 per day profit, wins and losses included. I'll take it. I'll just do that every day. Now, so that's Monday, Tuesday, Wednesday, Thursday. It alternates. A lot of times it's Wednesday, RJ. But look at this. Friday's coming. Friday's coming. Graham, look what AI was able to get for me. Aurora High School.
I know. I noticed that.
Sweatshirt. I don't know this guy. I've never met him. But
he goes to your school.
Apparently, he goes to my school. That's where I teach. But Friday is coming. Can't wait for Friday. Look at this. Bam. Friday. Yeah. Oh, hi, Stacy. Yeah, we'll post the rules for you after. Look at Fridays. Woo! Thank you. Yes. Just maybe, yeah. Late calls. Maybe not. Right? No, late puts are good on Friday. They still win. When we say late, we mean when the candle after 10:05 is the one that breaks us out. Okay? This is recorded. And you will have this later. Yes. All right, so here are the rules I put together for day, time, and direction. Again, times we skip, times we put our foot on the gas and double up, and then anything else is normal. You don't have to memorize this or take notes. 5-minute candles, right? Ready? Remember where we were. We started at 28. We got all the way, the first filter got us to 66. Ready? All right, put your guess. Where do you think we're going to land? Put your number in the chat. The price is right. What do you think? We got, oh, there's a lot of numbers there that came through. 80, 90, 76. Well, I think you're going to be happy. Boom.
Some people,
Just putting that second filter in with the days and times and direction takes us to 110 grand.
we had a couple people hit the winner there. They got 110 on their guess.
Yeah, I see some people had a bazillion. Oh man.
There you go.
Right? These filters to me are incredible, right? So that's 2 filters. But look at this. Here's where we started. Put call ratio 70.75. You know what? You'll be able to review this, and we'll put the slide deck in the slides in the class, probably, right? I'll give Graham my slide deck so he can put this in, so you can review it on your own.
Yeah, and just real quick, flip back to that last slide just to show people. Some people said that's based on a 5K starting stake.
No. 1,000 or sometimes. Okay, so what this is it's sometimes you're doubling up to 2,000, and then there were a couple instances when we actually went up to 4. At the perfect moment when the VIX filter and the daily filter. Oh, you're going to get a brand new indicator at the end of this. So there are times that we're putting our foot on the gas. You will get a new indicator. Yes, at the end of the class. Yep. This is no compounding. This is just picking the right days to play and the right days to sit out and the right days to add. How many trades total? Let me go back to the stats. You can see it. If you want to take a screenshot of this, you can. 268 trades, $413 per trade. We're risking a total of 234 grand on those 268 trades and a 47%. No, we had more losers. Is this 78%? Okay. Now, that's 2 filters. Here's my old prospector. This is what I feel like. This is how I feel. This is me searching for that third filter, right? Can we do it even more? What about gaps? Has anybody thought about gaps? Sometimes the market gaps up or gaps down. Does the amount of gap matter? Worthy of study. Like today was a big gap down. I wonder what happens on big gap down days when you then try to go short because it breaks out short. Well, let's see. Here's the numbers. If it gaps up and then we trade, and so what I did is I broke this into, I call gap up 0.5% or more. Gap up small was less than 0.25%. And then this is in between 0.25 and 0.5%. All right, so you tell me, when it gaps up, what should we consider? What do you notice? Any days that are particularly better than others? I noticed this was almost double just about everything else. So the medium gap puts did really pretty well. Okay, now that's when the market gaps up. So not a lot there, right? If we gap up small, sometimes the calls were not so great, right? What if we gap down? What do you notice? Like when we gap down big, and then we try to do puts. A gap down big would be any gap more than 0.5%, like today. What happened on our trade today? We got the put signal and it didn't work. Right. So if we put our new rules in place, if that were to happen, we just wouldn't trade. Now, it's not something to be mad about. We still had a 61% chance of winning, better than half. And there were some people that were able to get their 50% today. But it didn't surprise me. And I personally sat out because I knew these rules already. But it didn't surprise me that it wasn't so good. However, yesterday, we also gapped down big. And what happened? We got calls. And guess what happens when we gap down big and we get calls? That's pretty sweet. So some people got filled, some people didn't get filled. It was pretty close. It's just a matter of whether the market makers are doing it. Sometimes if you're close, you can adjust it to 5 cents less and get filled that way. If you feel like it's right there. If you have your order, and this is what I do. Let's say I buy for 250 and my profit target is 375 and it's at 375, 375, 375, not filling. I just cancel, replace, make it 370, filled, get out, take the money. All right, so, and you can see, actually, let me try this for a second. I was going to show you. Let's see if I can do this. Here's our chart today, right? We gapped down. We got puts. Yeah, maybe some people got it. And then it went the other way. And it's a 61% win rate. What about yesterday? If you can see yesterday, here was our gap. We went from here to here. Here was our breakout. I went double yesterday because I like this. And woohoo, great day. Okay? This is what we're looking at. We want to give the best guidance that we can on these days. All right. So here's some gap rules, third filter, just to improve it a little bit. Okay, what's your next number? Where were we? What was our last number? 110?
Yep.
All right, now this is just a little small filter, just a little thing. Don't, overreact. Like this is just, if we gap down big, let's not do puts. Let's do more calls, a couple little things. I think we have a winner. I think Zen got it. $145. And here's what I like better than the number. Look at the equity curve. If you think back to our first equity curve, that was no fun. This, nice progress, little drawdown. Nice progress, little drawdown. Find the next drawdown. Maybe a little bit right there. This is the kind of way, this is how I want my account to look. Put a me in the chat if you'd be happy if this is what your account looked like. Yeah, this is why I'm so excited. Now, there are some things to talk about here. But here's the numbers. 144.8. Notice our win rate is close to being the same. But because we're putting our foot on the gas at certain times, when we win, we're winning bigger. Now, here's my question for you, though. So there's times that we're trading 1,000 or 2,000 or 4,000 or 8,000. So what's the potential problem? I mean, this is a really nice improvement, but what's the potential problem with what I've got so far? Why not just say, let's just do this? Remember, I was talking about theoretically the person with the $25,000 account. Yeah, Stanley hit. How many people want to go ahead and risk the $8,000 loss? Now, I'll show you when we risked $8,000, it was a 100% win rate, but that's only 7 times. It doesn't mean that the 8th time won't lose, right? So the thing that we gotta, backwards. The thing that I think we need to consider, and that I considered, was this isn't apples to apples. I could probably convince somebody with a really big account to put in 8,000, but if you have a $25,000 account, I'm not sure it's responsible to put $8,000 of your account at risk just because, this guy Jason on the other side of the TV said now's the time. It worked 7 times. Like, I'm not sure that's the right thing. Now, most people in the trading business I have found, I've been doing this a while with a bunch of different gurus and services and things. Everybody seems very hesitant to talk about allocation because, there are rules about that. There are laws about that. We can't tell anybody how much money to trade. That's not responsible and that's not legal. So we are not saying this is exactly how much money you should put in. Everybody has to make their own choices with that, right? So what I'm sharing with you is going to be more personal moving forward. Okay, everybody understand what I'm saying? I'm not saying put 8,000 of your 10 grand into a trade. What I'm saying is this is how I am going to trade this. Okay, 8,000 is way too much. So from here, what if we came up with a system? Yeah, so you're talking about total capital, right? So what if we came up with a system that said in the morning, you got the level. And then you knew, hey, this is a normal day, whatever your normal trade is. If it's $1,000, put $1,000. What if it's 500, put a 500, whatever your normal trade is. Some days we're going to skip altogether. Don't trade. Some days we could even probably reduce it. Maybe we don't have quite as good of a, yes, you'll get the level. You'll get the level and it's in the indicator. So what if you said, okay, some days we'll only trade half as much. We'll go small. If I lose, I lose. Some days will be double, and then every so often, when everything aligns, we'll go triple. And this is all your choice. But for me personally, this is what I like. So how would that have gone? What if we did that? We'll risk less when our odds are not as favorable, and we'll risk more when we have an 89% chance or a 100% chance so far in the past. Right? So this is where my brain went. This is what I wanted to say. So now let's be a little bit more apples to apples, okay? Starting with a $25,000 account, if I trade it this way, 1,000, or 500 or 2,000, or maybe stretch it to 3, I could justify that. And there we go. Do you like that? There are, Tom. That's going to be our next. We're in the middle of the next study, but that's the next study. This is 2.5 years. It's way less than 145K, but I think it's more realistic for something I can do if I have a $25,000 account.
And everybody's different. So
Right.
some of you may feel better with 1,000, 2,000, 4,000,
Right.
so on and
And
so forth.
everybody's completely free to trade their own allocation size, but There are people in the room with $100,000 account. There are people that have a $4,000 account, right? It's all, but with this rule, everybody could follow this depending on if you wanted to, right? So I wanted to show you this. Trading it this way. Remember, here's our original. On the right is the original, and the blue is the new. Just putting in 500, 1,000, 2,000, 3,000. Check out how much less is risked. I highlighted that 154,000. We're risking 1/3 less, or 1/3 of the money, and we're making more than double. So I thought this was really eye-opening when I saw these numbers. Do you agree? Cool. Well, now here's the next question. Yeah, this is always the 50% profit right now. Okay, these are all numbers based on the 50% target. And what's happened over the last 521 trades. Okay, now I'm not done. Because honestly, I don't trade the same amount every single day. If my account started at 25 and it got up to 60 or 50, am I going to keep putting $500 in? I don't know about you, but I'd probably raise that a little bit. Someone in the chat even just said they trade based on percentages. And that's honestly the way I trade it. So again, this is not financial advice. I'm not a licensed financial professional, but I'm going to share with you what I would like to do, right? And that is this. What if my daily levels corresponded to the percentage of risk on my account? So I'll skip. I'll trade 3% on the light days, 5%, sometimes 10, and every so often when I really am convicted, everything is lining up. Like yesterday. Yesterday was actually a triple day. I could have gone 15%. Right? Would this work for you? Put a yes in the chat if this would work for you as a plan. Some of you might be more comfortable with 1% to 3%, and that's totally fine. And I'm going to tell you to err on the side of risking less if that means you can be consistent, right? What was the hedge fund that Nate was just talking about, Graham, where the hedge fund did great, but people lost money because they couldn't be consistent and live through the drawdown and just do the same thing, right?
Mm-hmm.
This trade is about just doing the same thing, showing up to work every day and swinging the bat. And that's how we're 24-4, I think, in 2026 right now, just doing the same thing every day. Okay, so what would this look like? So this is what I did. I said, yes, we will give you the daily level. Yeah. So what I said to myself, this is for me, and I'm just sharing with it. This is kind of like my private file, sneak behind the curtain. What if I set aside $5,000 in June 2023, and I traded with these rules? What if I had done that? What would that look like? Okay, that's realistic for me. Go ahead and put a number in the chat. What you think is a realistic account growth. We're not putting $8,000 in anymore. We're doing percentages. Put a number in the chat of what you think $5,000 could become in 2.5 years. Starting with 5. Well, let's suppose I have a cash account, so I don't have to worry about the pattern day trade. 720? Good grief. All right. Well, some of you may have a little unrealistic expectations. I asked my wife this question. So to frame this, I said, if we had $5,000 2.5 years ago, and I told you I was going to do this trade every day, and I was going to risk like normally 3 or 5%, right? Sometimes 10. What do you think would be what would you say good job? And she said, well, if you could make that like 20, that'd be awesome. I'm like, okay, all right, 20? I get a pat on the back for 20? You can in TradeStation, as long as you have more than $2,000.
And keep in mind, guys, starting out that first level is like $150. The second one's $250. So we're not talking throwing all $5,000 in.
Right. And honestly, I don't think we would trade more than 3 days a week typically anyway now because we've got so many skip days. But I think we could probably work around the pattern day trading a lot easier. That's all. All right. Well, here's our number. And woo!
That's awesome.
119 grand following those same rules every day and find the drawdown. This is what I love. This gets me pumped. This is 2.5 years. Here's the drawdown after you've got it up to 100 grand. I love this equity curve. Isn't that amazing? I can totally trade this comfortably and realistically, and I'm not putting 8,000 out of my 20 on the line. And I can just do this every day with trust and with faith to say, I'll just do the thing. I'll just do the thing. I think this was ending of 2025, actually. All right. So this is what makes me jazzed. Now, you might say, well, that's just the power of compounding, right? Oh, this is a screen I forgot about. This is like, I think I want to post this on the wall above, like on the ceiling above my bed.
Yeah.
So as I'm falling asleep, I have something nice to think about. Over 2.5 years, I'm trading percentages. Now, if you know what CAGR means, that's compounded annual growth. You're averaging 254% on your account. We're showing you the daily level. You're trading the percentage account of your account as you're comfortable with. The rules, again, the rules that I followed here, 0%, 3%, 5%, 10%. That's the rules to get this. I can do that. Okay? So this is the argument that I get. That's just the power of compounding. That's you're only getting those big numbers because you're compounding. Yeah, true, sort of. So I tested it. Is it just because of compounding? What if you took the trade? Forget your stupid levels and your filters and your, old prospector stuff. Who cares about any of that? We'll just compound it 5% per day. I'll bet I could get the same results. And so I tested it. There you go. There's your compounding. So my wife's goal would have been short. This is 5% per day of your account.
With no filter. So the base strategy.
No filters, just every day. Okay? Okay, no day should be a big loss. There should be no such thing as a big loss. It should just be a normal loss. If we're allocating right. It's just a loss. Okay? Yeah, there you go. It's a give back. All right. So then I looked at, well, what if, okay, you know what, Jason and Graham, I don't need all this levels stuff. Just tell me when to trade and not to trade. How would that go? Okay. So, well, if you have I have a TradeStation account, and as long as you have more than $2,000 in the TradeStation account, I can trade this. I can take this trade. So what if I just did this? 1,000 or skip. Well, that's still pretty good. That's how it would go. Same win rate, about 48 grand. Still better than their original 28. But sitting out this highlights sitting out the right days matters just as much as putting your foot on the gas. It's really important to sit out the right days. So here's the VIX rules. Here's the daytime and direction rules. Here's the gap rules. We put this all together. It's over 2.5 years. We put this all together. I like this slide. This is what I'm going to use now moving forward, right? My half allocation, my normal, my double, right? And my triple. We need to know the levels before we place the trade, right? It only helps us before we take the trade. So much shiny on this screen. So this, you'll see this is what my spreadsheet looks like. I just posted my spreadsheet in here. So I'm entering in the VIX numbers, entering in the 1 days, entering what day it is, entering in what the SPX did yesterday and today, and then out comes the machine that spits out today's level. Today is maybe a level 2, for example, right? And then Graham, here's the good news. You don't have to do anything with a spreadsheet, and you don't have to do anything with this machine. Graham took this and he coded it for TOS. And so this, you will get this indicator today. He will show it to you and you can have it. And that indicator will look something like this. So that when the trade is triggering, you're seeing, oh, today is calls, take it right here. And today we're half size. Or puts, and we're size 1, normal allocation. Look at yesterday, calls, size 3, bang. Yes, you will get this indicator. You can upload it onto TradeStation, onto TOS. I'm sure we will do it for TradingView as well, eventually. So today was technically a skip because today we only had 61% chance of winning. Still a chance of winning. Somehow calls and skip size 3. Oh, this wasn't today. This is yesterday.
Or the day before, you probably see both. You'd go with the first signal. So it was call size 3 the day before.
Yeah.
Of course.
Whatever. So sometimes I think what's happening here, it breaks out and it gives you something, it comes back and then it breaks out again.
Mm-hmm.
And that's why you're getting the second signal. But we were already in call size 3.
You guys are still getting alerts, and we will include this information. It's just for those of you who want to download it and see it for yourself. If you don't care about that,
you will get it on Telegram. This is all hitting the 50%. Winning means hitting the 50% target.
Yep.
When we say size, yes, we're talking about number of contracts and the amount that you allocate, how much you're going to put at risk. That we will eventually do it for TradingView as well.
Yeah, I actually just don't feel like you have to rush over there now, but you can. I just made it, gave it to our team. They just put it in the members area. We're all members here. If you save that link, it should load up for you guys. But again, remember, this is a bonus. In the chat. We're still going to be doing the alerts.
Yes.
We're going to include these in the Telegram. So don't worry.
Still Telegram.
Yep.
Still all this stuff. You're just getting more. Yes, 0 DTE, same trade. Always shooting for 50%. Yes. Right now, yes. And I'm going to turn this over to Graham to show you that in a moment. However, there is just one last little kicker, one additional bonus. Okay. Well, there are alerts come on Telegram. You'll get that. You'll get the alert and you'll get it on TOS. Yes. One additional bonus. Everybody ready for what extra bonus? What we found, here's one thing that we found when we were digging, when we were researching, and we're still researching what happens when we try to hold it all day. But when we tried to hold puts all day, when the VIX was low, look at our win rate. That didn't work out very good, did it? So think about what's going on, right? The VIX is low. The stock breaks out to the downside, and we decide we're going to put on puts. And that didn't work very well. It only won 36% of the time. So that is such a terrible win rate that what if we thought, would it stand to reason that what if we just did the opposite of this? For Seinfeld fans, what if you were opposite George? Every instinct that George has, what if you just did the opposite? If George loses, maybe opposite George is bound to win. This is just the VIX, the low VIX days that we're normally skipping right now because it doesn't work. Well, what if on the days that we would normally skip, what if we traded this the other way? What if we did calls when it broke out? If we have a 36% chance of it going lower, doesn't that mean they have a 62% chance of it being higher? So this is something we are going to dive into testing. We think a 62% win rate when you hold all day, remember, you're risking 250 bucks to try to make 250 bucks. So as long as you can get better than 50% win rate, you're making money. This could be a potential way to make some money. Oh, did we do the math wrong? Oh, it's 63. Oh, geez. I feel dumb about
Oh
that.
no, it's all right.
I should be able to subtract by
We'll
now.
blame Gemini. It was probably
I'm
Gemini.
like 50. I should be able to subtract.
Yeah.
So yeah, this is something we're gonna dive into this and look at the own filters that might work for this.
Yeah.
But we are excited and hopeful that this is the next phase coming. Is when do we hold all day? And when could we make money on the days that we would otherwise be sitting out? This could be, by our math, an additional $29,000 of profit on our off days. So not only did we get that 145 grand before, but this could be an additional 29 tacked on top of that for the days that we would normally be just taking the time out.
Yep. So we're looking for ways, and this is probably a pretty obvious one that we'll hopefully be able to dial in pretty quick. Looking for ways to turn those skip days into, yes, a sweetener, a little extra something we can do. Instead, this
Yes.
isn't this. Someone asked, "Is this going to be a new service?" No, we're doing it all for the 60-minute members.
But just to wrap up, and then I'm going to turn it over to Graham because he can show you a little bit more about the indicator. Okay. Today's recommendation would have been a skip. So this research, is you can see, is pretty extensive, right? Taking 521 days and diving into all this stuff. All these suggestions, all these things, all these recommendations that we're talking about is just based on the research. It's not 100% moving forward. It's not, we're going to have days that we skip and then it wins and you're like, oh, stupid research, right? And that's just the way that's going to go. There's days today when I knew based on the research we had a 61% chance of winning, and that wasn't high enough for me. But we didn't want to. We didn't want. Can you imagine the mass chaos if we had said we got the trigger, but we're going to not trade it, and we haven't told you why yet? So we are working on this. I can tell you it takes a ton of time. This was like 4 months of work right here that you just got to see, and we're not done. That's what we're saying. We're gonna keep diving into what about holding all day? What about the off days? What can we do when the VIX is low, right? But the Telegram is still going to be functioning. You're still going to get all the trade alerts. You're going to get you're not getting anything less. You're only getting more.
Mm-hmm.
Okay. So I'm going to step out here and give Graham a moment just to kind of wrap things up and show you more about the indicator that you're going to get. But before you go, like, give me your, if you could put one word to what you've just seen today, how are you feeling? What are you thinking? What would be 1 or 2 words that would describe your reaction to this?
So many words, it's hard to read them. You guys are awesome. Hey, thank you guys for hanging in there, trusting us with your time, your trading here. Really diving in. I mean, we had over 300 folks here today. Thank you guys for your commitment, as we are committed to you as well. And we really, really look forward to making this the best thing you've ever been a part of. That's our goal with anything we do. So obviously, we're off to a great start this year. Hopefully, it gets even better.
I mean, from where I'm living right now, where I'm sitting, personally, I'm thinking, why do I need to do anything else? Just do one trade a day with my allocation rules. I'd be super thrilled to turn up 5 grand into 120 grand in 2.5 years.
Oh yeah.
24 times your money. Why would I need to do anything more? And yet, we're still going to try to make it better and better and better and better and better. And this is just based on numbers and research and data. And I love it that it's not based on opinions at all.
Uh, Omar said Jason for new Fed chair. I love it.
So if Graham, if you want to show them the
Yep.
indicator, if you want to take the screen and show
Let me
them
do
what they're going to
this.
get to see, now it should make sense to you what you're going to get to see.
So I'll post this again for you guys. Um, Let me show you too where it's at in the members area. So this is I'll link to the dashboard here. If you go to your one-click members area as well, the team is currently uploading. It may already be up. So if you're in the 60-minute portal, scroll down, indicator, click that. Should be right there. There it is. So we just made it for Thinkorswim. It applies all of the rules we covered today. Again, you do not need to use this if you don't want. It totally optional. The reason I give this to you is so you can see what we're seeing in real time. So you can see today, put skip. Put skip. So in the Telegram, you would have gotten an alert, hey, today puts fire, but we're skipping. There would not be a trade. We would have passed. Again, you don't need this. I know there's a lot of questions. We're still going to get the alerts, entry and exits, but I wanted to give this to you so you can have it in real time as well. And if you look back, again, each day, what the alert's going to look like is the exact same, but it's going to include calls. And then below that, it'll say allocation, 3 size. Day before was calls, allocation, 3 size. Day before that, puts, allocation, 1 size. Calls, allocation, half size. That's what you're going to start seeing in the alerts based on everything we covered today that we now have automated in this indicator for you guys. So hopefully that
As
all
I'm
made
looking
sense
through
then.
the as I'm looking through the chat, I'm just going back on the chat because I couldn't read it when I was talking, but I'm seeing people asking questions about, well, what if I want to do it differently? What if I want to trade more or trade less? You please hear me. You have complete freedom to trade however and whatever amount you want to trade.
Yep.
This is completely for you. We are a tool for you to utilize or not, however you want. If you want to put 8 grand at risk, go for it. If you want to put just a tiny amount or do, small every single day, totally fine. We are not ever going to tell you how much you should trade. My goal, and I think our goal, is to say, here's what the research shows. Going back, had you followed these rules over the last 2.5 years, this would be the result. So
Yep.
if I want that result, then I personally am going to try to consistently do just that. Not think, not guess, not overdo it, not just be consistent.
Yep. Someone asked, what does a half size mean? So if you say, for example, you normally put in $500 a day, well, half size, you'd buy you put 250 in. If size is 1, $500. This is just an example. Size 3, 1,500. Someone asked if I can show you here in the members area, 60-minute income. Scroll down indicator. It'll be right here. I also updated the dashboard one too. It's just the same link. And that will make it look like this for you. So you can see SPY, XSP, SPX, all side by side. Someone asked what will be new. Well, going forward, two things we want to focus on next. One is, are there instances where we want to go for a max profit instead of just a 50% target? And then secondarily, on those skip days, like today's a skip day, guess what? Remember what Jason just showed is a low VIX, but maybe there's an instance if we get a big gap down, puts or skip, is it actually an inverse buy calls hold all day? In this case, if that were the signal and we don't have that data solidified yet, that will be next. Well, that would have been a 100% winner today. So that's what we're going to be looking for next.
And for those that are trading in a small margin account and cannot day trade, my research is not complete, but my preliminary results are showing that you make more money holding it all day. you're just not going to have as good of a win rate.
Right.
But if you wanted to take, which is one of the things that one of my accounts is a $4,000 account, and I take one SPX contract every day, and I hold it all day.
Mm.
And that account has almost doubled since the beginning of 2026 in these 2 months, just taking one trade a day, holding all day.
Awesome.
And
Yeah,
that avoids the day trading issue.
I love the max winners. So we'll dive into that next. Guys, some people are asking, how do you install it? Go to your members area, scroll down to indicator, click there. There's a video for you. So if you have questions on that, go there. Awesome. All right, cool. Well, we appreciate you all showing up today. Hopefully, it seems like a lot of people, all of y'all were very excited. We're excited. Again, we want to make this the best thing possible for you guys. And we're not done either. The party just got started, and it's taken a huge leap forward. Thanks to Jason, all of his good work, and thank you, Jason, for coming and preparing all of this. They didn't see the months and months of work and late nights you spent getting it ready for us, and then also doing just an awesome job teaching. Jason's the best teacher in America. If anyone's curious, we are lucky to have him. So thank you, Jason. Thank you all for being here. Again, thank you for being committed to this strategy. We are committed to you guys as well. And we'll start rocking and rolling here. Again, you'll see the same alerts as usual. It will just include the allocation size if you want it as well. And we'll have more updates for you in the future. Thank you all.
Did you notice the Aurora Street sign in my last slide? It said
No.
downtown Aurora.
Is that what it looks like?
It gave a street sign of
That's
downtown
awesome.
Aurora.
That is great.
I just noticed that.
And it's raining money in Aurora. Yeah.
Apparently.
Yeah. Well, thank you guys so much. Hope you have a great rest of your Tuesday. We'll be on the opening playbook tomorrow, 10 a.m. See you there.
All right. Good night, everyone.